Welcome to your weekly market update where we talk about everything mortgage and real estate related. We have some great information to talk about as always, so let's jump right in. First off, CoreLogic and Black Knight both reported that home prices rose 0.2% in October and are now up 4.6 to 4.7% year over year. They're both on pace for a 7% full year appreciation. CoreLogic now forecasts that home prices will be flat in November and rise by 2.9% over the next 12 months. With low inventory and an increase in demand, we continue to see strength in home prices. This will continue if mortgage rates drop and inventory stays at all-time lows. Now, as for mortgages and inflation, the November ADP employment report showed that there were 103,000 jobs created during the month, which was weaker than the 130,000 expected. The JOLTS report showing job openings in October declined to 8.7 million from 9.75 million, well below the 9.3 million the market expected. The job market continues to show cooling, which is good for inflation and ultimately lower for rates. The Fed Beige Book, which released yesterday, show that 8 of 12 districts are in contraction, pointing to a slowdown in the economy and the potential for a recession ahead. This is all pointing to the Fed's cutting rates next year. Check this out. The Fed funds future cut odds show that we could see up to 6 rate cuts in the next 12 months. It's not guaranteed, but very likely, which is good for mortgage rates and borrowing costs across the board. The MBA released their mortgage application data from last week, showing that interest rates fell from 7 3/8 to 7 1/8, with some scenarios, check this out, under 7%. Purchase applications were flat after rising the previous weeks, but still down 17% year over year. During the holidays and winter months, you can get deals on properties. Just this week, we got 2 appraisals that came back approximately 10% higher than the purchase price. If you're willing to work with the weather, now is a great time to buy. Let's go.